Good afternoon, everyone. Thank you for taking the time to watch this video update. In light of all the events that have dominated the headlines in recent weeks, we felt this was a good time to reach out and share our perspectives on handling volatility in today's markets. As you are surely aware, the first weeks of 2016 have been rocky for equities. Following another round of bad data out of China and another move to devalue China's currency, the yuan, markets folded under selling pressure. Add this to renewed concerns about slowing economic growth around the world and challenging headwinds in the form of rising interest rates, a strong dollar, and falling commodity prices, you have a near perfect recipe for a stock market correction. And a correction, defined as a 10% drop from recent highs, is exactly what we have experienced in recent weeks. When markets swing, it's natural to worry about your investments and question your commitment to your strategy. As financial professionals, we wanted to pass along some tips for handling volatile markets and not letting brief periods of negativity derail your strategy. So number one, try to tune out the noise. Turn off the television, throw away the business section of your newspaper, and stay off of financial websites. Hanging on every word from the talking heads will only add to your stress and encourage emotional decision making. Media headlines are designed to put in eyeballs, and that's why nearly everything you read about makes it look like the sky is falling. One of the major reasons why you work with a team of trusted professionals is so that you can delegate the worrying to us. We'll keep you informed and update you when we need to make changes. Number two, stay focused on your personal big picture. Ask yourself, am I living comfortably right now? Am I making progress toward my future goals? Has anything changed outside of what's going on in the markets? How long is my investment horizon? If you're invested for 10, 20, or even 30 years or more, volatility that lasts days, weeks, or even months is a blip on the radar. Though we can't use the past to predict the future, the S&P 500 has delivered average annual performance of 11.4% since 1928. Keep in mind that those years include the Great Depression, during which stocks lost 83%, the bear market of 1987, when stocks lost 33.5%, and the 2008 financial crisis, when the S&P 500 dropped 57% before gaining 202% over the next 6 years. We don't make drastic changes to portfolios just because markets swing. We take a look at the fundamentals, do our due diligence, and then make prudent adjustments where we feel they're necessary. Number three, focus on what's in your control. Can you control what markets are doing? If you can, we'd like to hire you, because we can't. What we can do is work with you to understand your personal goals and create a custom investment strategy that's designed to help you pursue them. We can do all the research, do all the analysis, bulletproof the strategies as best we can, and then we have to work with what the markets give us. That doesn't mean that we just sit back, throw our hands up, and say game over. No. What we do is monitor the markets, follow the experts, and do a ton of analysis to find opportunities to invest in when markets are volatile. What you can do is stick to the strategy we created together. Keep living your life and focusing on what matters to you. We also want you to use these corrections as an opportunity for a gut check. If you're really worried about your portfolio, it might be time to do another risk assessment. If you're feeling pretty calm, then you're doing very well. We want you to be able to sleep well at night. Number 4, don't give in to emotion. Volatility makes for stressful investing, and it can be tempting to bail when stocks fall and try to ride out the bad times on the sidelines. Unfortunately, trying to time when to exit or enter markets is very difficult and not likely to work out in your favor. Research shows that investors are terrible at predicting market tops and bottoms. That means that they usually buy high and sell low, which is the exact opposite of what you want to do. Corrections happen regularly, and periods of high growth often occur close to major pullbacks. If you're not in the market when it rallies, you may miss out on the best days of performance. Number 5, stay flexible. Thriving during volatility doesn't mean sitting on your hands. One of the benefits of an active, flexible investing style is that we can make strategic shifts to take advantage of new opportunities that arise. As professionals, we are always looking for prudent opportunities to help our clients pursue their goals in changing market environments. We may talk to you about making some changes to your strategy to try to take advantage of what's going on in the markets. So where do we stand? Investor sentiment is negative right now because people are uncertain about a combination of factors from slowing growth in China, tumbling oil prices, and concerns about how that will affect corporate profits. However, the domestic growth picture is still looking modestly good. We have a strong labor market, consumer sentiment is high, and we're hoping for some strong consumer spending numbers. That's not to say that it's all roses, as markets are facing a lot of challenges. So in conclusion, successful investing is a long-term project. Though pullbacks and sustained periods of volatility are stressful, they are a normal and natural part of market cycles. As financial professionals, our job is to sort through the barrage of information and take a look at what's going on underneath. Your job is to stay calm and focused on your goals, knowing that there is a serious professional who is taking care of the details for you. We do not think that now is the time to take drastic action. If you have experienced any life changes or shifts in your goals that warrant changes to your portfolio, please let us know as soon as possible. As always, we are here to provide you with clarity, perspective, and support during challenging times like these. Thank you for the confidence you have placed in our abilities. We consider it an honor and a privilege to be good stewards of the assets that you have entrusted to our care. Lastly, we would like to mention that the information from today's call is also available as a special letter. If you or someone else you know would like to receive a copy, please let us know. So on behalf of everyone at Investec, we wish you all a good weekend ahead, hopefully filled with time with the family and not reading the Wall Street Journal.